Hi everyone, welcome back to the channel. Today we are diving into an essential accounting concept, retained earnings. If you're an accounting student or just someone looking to understand how retained earnings work, this tutorial is for you. By the end of this video, you'll know exactly what retained earnings are, how to calculate them over multiple accounting periods, and how they affect equity. So let's get started. Let's begin with the basics. What are retained earnings? Retained earnings refer to the portion of net income that a company retains rather than distribute to its shareholders as dividends. Essentially, it's the accumulated profits that the company reinvests in its operations or keeps as a reserve for future use. Now let's get into the nitty-gritty of how to calculate retained earnings. The formula is simple. Retained earnings equals beginning retained earnings plus net income or minus net loss minus dividends. In order to break this down in detail, we are going to calculate retained earnings for a company named Bright Ideas Candles over a period of 3 years. That is 3 accounting cycles. We are going to start from the beginning, from year 1. But first, let's recap how you obtain this piece of the formula, net income or loss. If you already are familiar with closing entries, you know that you calculate this when you close out your temporary accounts. Let's do a 1-minute refresher on the concept. At the end of each reporting period, typically a year, the revenue and expense accounts, which are temporary accounts, are closed out against retained earnings. This means the balances are moved to retained earnings via closing journal entries. This resets their balance back to zero to get them ready to start a new accounting period. The net of revenue and expenses is either a net income if the revenue is greater or net loss if the expenses are greater than the revenue. For instance, if Bright Ideas Candle Corp earns $50,000 in revenue and incurs $30,000 in expenses, the company has net income for the year. The closing entries would be as follows. You debit your revenue for $50,000 and you credit your retained earnings for $50,000. You debit your retained earnings for $30,000 and you credit your expenses for $30,000. This results in an increase in retained earnings by the net amount of $20,000. Now let's see the retained earnings formula in action over a 3-year period. What happens in year 1? Imagine our candle company, Bright Ideas Corp, starts the year 1 with 0 retained earnings. By the end of the first year of operations, Bright Ideas Corp makes a net income of $50,000 and they do not pay any dividends. So at the end of the year, we have a 0 balance in the beginning retained earnings plus the $50,000 net income for the year minus 0 dividends, which equals the $50,000. So at the end of year 1, Bright Ideas Corp has $50,000 in retained earnings. What happens in year 2? In year 2, Bright Ideas Corp makes another net income of $30,000. However, they decide to distribute $10,000 to the owners as dividends. If we plug these numbers into our formula, we have the $50,000 beginning retained earnings plus the $30,000 net income for the year minus the $10,000 dividend. So at the end of year 2, the company has $70,000 in retained earnings. Now comes the 3rd year. In year 3, unfortunately, Bright Ideas Corp faces a net loss of $20,000. They also distribute $5,000 to the owners as dividends. So if we plug in the numbers into our formula, we have the beginning retained earnings of $70,000 minus the $20,000 loss for the year minus the $5,000 dividend payment, which equals $45,000. So by the end of year 3, Bright Ideas Corp has $45,000 in retained earnings. As you can see, retained earnings can fluctuate based on net income, net loss, and distributions. It's crucial to keep track of these changes to understand a company's financial health. By following these steps, you can easily calculate retained earnings and gain valuable insights into your company's performance. This understanding can help you make informed decisions about reinvesting in your business. Did you find this video helpful in understanding retained earnings? If you did, make sure to give it a thumbs up and share it. Don't forget to subscribe to our channel and hit the notification bell so you never miss out on my latest videos. Have any questions or topics you'd like me to cover next? Drop a comment below. I'd love to hear from you. With that said, thanks for watching and until next time, bye.